Traders, what is going on? It's your boy Colt Steph, and if you guys have not yet followed me on Instagram, please do. It is at Colt_Steph, or there actually is a link below where you guys can follow me. But I wanted to dive right in because I have a very important message for you guys. I really want to show you guys exactly how I set up a chart so you guys can get an understanding on how someone that's been doing this for 5 years can do it so easily and effectively. So let's start. I am looking at GBP USD right now, and automatically the first thing that I'm really doing when I'm looking at the market is I'm looking at the trend. We're in an uptrend. You guys can see the trend reversal when we have that W pattern. We have our left leg, then our right leg, perfect entry right there on the daily chart. Now we started to go up. We broke new resistance levels that were higher than right here. So right off the bat, we're in an uptrend. And another thing that I'm doing when I'm trading, I like looking at higher time frames like the daily chart. That is just me. It's more accurate trading that way versus going into smaller time frames like the minute 30, the hour 1. Why do I choose to go on higher time frames like this? Well, first off, it's way less emotional. When you're looking at smaller time frames like the minute 30 and hour 1, the market's just fluctuating so quickly. It's going up, it's going down, and it's harder to see the overall trend. So with me, I am more of a swing trader, meaning that I am trading more long term. I hold my trades for a couple of days at a time. So the first thing that I'm going to do is grab my Fibonacci retracement right here. I'm going to bring the 100% level to this point of resistance. Then our 0% level is going to go down at support. I like to kind of pull it into the future so I can see what's going to happen over here. And I want you guys to notice something. The most retraceable levels when we are using this tool is this 618 level and the 50% level. So with me, I'm a visual person. I just like to look at things a little bit more clear. So I grab my little rectangle tool right here and I mark up this zone right here, okay? This is a very retraceable zone in the market, and look in the past how it hit it. Came up, came back down to test support, hit resistance, came back down to support, and then finally broke up here to new resistance levels. And now look, the market came back down, tested the 50% level again, and now we're looking to have a retrace. Another thing I want to do for you guys, I'm going to delete the fibs, or I'm going to delete the rectangle right now. And I want you guys to look at something. These are reversal candles in the market. These current daily candles, you guys can see those daily candles. Those are spinning top candles. It's just like that little toy we used to play with as kids. That's why they call these candles the spinning top. So look in the past. Doesn't this candle really look similar to this candle right there? So something that you guys all need to keep into consideration is when we are trading, you need to look to the left. Structurally is clue. So look in the past. What happened in the past when that candle formed? It completely shot up. Kind of had the same candle right there. That's a doji, and then it went up. But we have these long candles and we have pins at the bottom. So another thing that you guys need to look at is the candles are like the bodies. Like this red candle right there, that's the body. And you guys see the body right there on that candle and then that pin. So every time that we have pins to the top, it's most likely going to drop. When we have pins to the bottom, it's going to go up. So another thing that I see on the Fibonacci is we came and retested the 50% level. And as well with that, that red line going through the chart, that's our moving average, our 50 length moving average. So I'm going to be going over a lot of advanced stuff for you guys so you understand this. But the moving averages are that red line right there and that green line, and what they do is they measure major points of support or resistance. So there's something that also goes into it with the moving averages. You guys can see right here, do you guys see that red line, how it went over the green line? So the red one is our 50 length moving average, our green one is our 20 length moving average. Every time that the 50 length moving average goes over the 20 length moving average, that's signaling to sell. So look at what just happened here. I want you guys to look at this. Look at how the red one went under the green one. It didn't go over in the past. Every time that the 50 length moving average goes under the 20 length moving average, that's signaling a buy. So right here, we're seeing confirmations of buys right here. We're above our moving average. The moving average crossed under the 50 went over the 20 length. We hit the 50% level on the Fibonacci's, and we have confirmation that it's closing above that level right there. So we do see strong buys right now on GBP USD. Now, the last thing that I would do is I would mark up my support, or I would mark up my take profit and my stop loss. So let's remove this little box right here, and take profit levels are going to be right here at the 100% level. That's where we want this market to go. We want it to break that resistance and continue on the uptrend. So what I'm going to do is grab this tool right here, I'm going to get my long position. That's for a buy. A short position is for a sell. So I grab that tool. I find the current price in the market. Unless we're going to do a buy limit or something like that. So alright, let's get it right here. Perfect. So you put this black line right there. You put it exactly where the current price is, that blue line. Then you're going to find your stop loss. So my stop loss, what I love about the Fibonacci's is it has these key levels on it, the 382. So look at how the market, it came down and it tested the 382 level right there, and now it went above it. It actually closed above the 50%. It really didn't hit the 382, but it tested those levels. So that's what my stop loss would be, below these pins at previous support. So let's do this real quick. So I grab this side of the box and I'm going to put it at the 382, just like that. And my take profits are going to be all the way up here at the 100% level. Ooh, we have some money on the table. So look, where it says 96 right there, that's 96 pips. So we're risking 96 pips on this trade. And then we have a reward of 266 pips right there. So usually when I'm trading, I want a 3-to-1 risk reward ratio, and it's a 2.7. So honestly, there's two things that we could do. We could put our stop loss a little bit tighter. What's that, like right there? And I'm looking at that pin right there. I want it below that pin right there. So I'm gonna have my stops right there, just above the 382 level, just where that pin hit it. So now we have a stop loss at 80 pips, and look how it says 3-3. So our take profit is 3-to-1 risk reward ratio. You guys can't say from that point at our entry to here, that is 3 times bigger from our point at our entry to our stop loss. So that's what we mean by 3-to-1 risk reward ratio. But we have 266 pips on the line. If you're doing a 1 cent lot, you have $26 on the line. If you're doing a 10 cent lot, you have $260 on the line. If you're doing a standard lot, a dollar lot, you would have $2,600 on the line. So put that into perspective. A lot of people like me that have a lot of money in their trading account, they're able to catch 260 pips and make thousands of dollars because we have so much free margin in our account and so much capital. So put it into perspective for you guys. This is more of a long-term investment if you guys don't have money right off the bat. Overall, this is an investment that you guys can make a lot of money from, but you guys honestly do need money in your trading account. A lot of people, they're trying to just come into the markets. They want to make money immediately. They don't know what they're doing. They lose the money. They come up with this excuse and facade that, oh, Forex doesn't work, it's a scam, whatever it may be, and that's simply because they didn't have the guidance. They do not know what they're doing. So I hope you guys enjoyed this video. If you guys have not yet subscribed, please do. And let's connect. Like I said, my Instagram is in the link in the description, so follow me. Reach out to me if you want to learn from me, if you guys want to work together. Let's fucking do it. But guys, I appreciate you all watching this video. Peace out.